see, the government made money on that one. Well, I beg to differ because Chrysler is bankrupt again, looking for an even bigger bailout now than 25 years ago. So, how can we say that was a success when they're asking for even more money now? And to say that we made money bailing out Chrysler, we don't know because we're giving them more money, right? And so we might end up losing. But even if it turned out good, it doesn't excuse the fact that the government had no constitutional authority to do it. We say that we created a bad precedent, and now here we are using that bad precedent as justification for more of the same. And, of course, we don't know. Let's assume that the government had let Chrysler fail back then. We don't know if our automobile industry would be like. Maybe it would be stronger. Maybe Chrysler would have become leaner and meaner had they not had the guarantees. Maybe Ford and General Motors would have been in better shape. Maybe they would have picked up some of Chrysler's assets cheap and done a better job. Maybe they would have been more fearful of a potential bankruptcy on their own, and maybe they would have been more responsible. We have no idea what would have happened had the government allowed Chrysler to fail. So to say that this was somehow a success is all a bunch of nonsense. But of course, this is just the politicians trying to justify these bailouts. But the point is, now that we're bailing out Detroit, right? It looks like that's what we're going to do. Everybody that comes up, it's like, well, what about me? What about me? Because the main reason that Detroit is saying we deserve a bailout is, well, you gave a bailout to Wall Street. AIG got money. Why can't we get money? And so that's the mentality, and they're not going to say no, and so everyone's going to get bailed out, but where's the money going to come from? They're going to print it. Now, right now, the Fed is getting away with printing all this money. Why? Because there's demand for dollars right now, temporarily. Because of deleveraging, there is demand for the money the Fed is printing, but it is temporary demand. It is not going to last. And ultimately, all the dollars that are being warehoused are going to come back on the market. This is just, as I said, people are running towards this nuclear blast right now out of sheer rote. But once they figure out that they're, what they're doing, they're going to turn around and run for the exits. And, also we noticed that the custody holdings, if you look at, where you're seeing a huge increase in holdings of U.S. Treasuries is coming out of the Caribbean islands. Now, obviously, these Caribbean islands, there's no real money there. This is just, funds, hedge funds, or potentially it's Federal Reserve buying in disguise, so it doesn't look like monetization. Although, basically last week, Ben Bernanke came outright and said that, since there's not that much room left to cut rates, we're already at 1%, he basically said, well, what we're going to do is we're just going to buy government bonds. We're just going to, just buy, print more money and buy more bonds. So they're not even hiding it. They're just basically saying they're going to do it. And the ironic thing about it is we had a huge rally in the bond market. Bond prices hit record highs and yields hit record lows because the Fed said they're going to print money and buy bonds. Now, that is not bullish for bonds. It's bearish because it's creating inflation, which undermines bonds. This is not like a stock buyback. This is inflationary demand. This is the worst thing that can happen for the bond market. Yet the bond market rallied. So it shows, what's going on right now in the markets. It's got nothing to do with any kind of real fundamentals. And as I said, the dollar has strengthened recently. This is a gigantic head fake. A lot of people are being fooled, right? They're seeing the dollar is rallying now, and they're jumping to the false conclusion that this crisis must be good for the dollar because the dollar is rallying. That's not the case at all. The rally has got nothing to do with that, and I think that, generally in markets, they want to fool a lot of people. And that's what's happening. And, a lot of, gold has gone down and, gold stocks have gone down and a lot of things have gone down that should have gone up. It doesn't mean that they're ultimately not going to go up. It simply means that a lot of people are going to be forced out of these trades and they're not going to live to see the profits. Part of that is their own fault because they were too leveraged in the first place. And part of it might have been that they didn't really have the conviction to stick it out. But the people who really understand what's going on, I'm convinced they're the ones that are going to end up on top because they have the conviction to ride this out and potentially the ability to add the positions because they understand the bargains that they're looking at, and they're not going to be fooled by market noise, which is what I think is going on right now. And as far as the stock markets are concerned, it seems like we haven't really been making new lows. The market's, been very volatile. There's big up days, big down days, but we haven't really been making new lows. I don't know if this means that we're in for a more significant short-term rally or if there's another major down leg coming. There's just no way to tell for sure. I think there's a decent chance that we're going to get some kind of rally, especially since I think there's going to be a lot of euphoria regarding Barack Obama, and I wouldn't be surprised if the markets rallied so that the media can say, gee, this is great, the world, everybody is confident, we got this new team in there, they're going to fix everything, they're going to make it all better, and of course, they're just going to break it further, and it's going to be a lot worse, but I wouldn't be surprised that, to see some kind of rally in the stock market, all around the world. I mean, not just in the U.S., but pretty much everywhere, because everybody thinks Barack Obama is going to save the day. Of course, he's not going to do that. The question is now what's going to happen to the dollar. That's a bigger factor here, especially for our portfolios at Euro Pacific. And the dollar again has not made new highs in the past week or so. It seems to be just going sideways. I can't tell for sure whether we're basing for another move up in the dollar, which would further suppress our portfolios, but would create even better opportunities to buy than what we have today. Or this could be indicative of a dollar top. The dollar rally could be over, in which case I would look for a precipitous decline to begin in the dollar once we kind of break down from this pattern, which of course would be very bullish for our current accounts, but would be a negative for people who are yet to get their money abroad, because it would make it increasingly more expensive to get out of the dollar. But there's no way to know what's going to happen in the short run. In the long run, there's no doubt in my mind that this dollar rally is phony, that it has nothing to do with the fundamentals of the U.S. economy. It has everything to do with the noise in the market and the deleveraging and whatever's going on, and that when the dollar rally ends, I mean, whether it's already topped out or whether it's got more upside to go, that when it does finally lose steam, it is going to drop like a rock. And, I think it's going to lose value very, very rapidly. And I think those people who are trying to finesse it, who think that they're going to stay in the dollar and then get out, before it collapses, I think that's easier said than done. And I think people are going to find that very difficult to actually accomplish. I mean, in theory, it works great. The problem is, in practice, you don't know when to do it. And so, I think you need to err on safety. And since we know the dollar is going to collapse eventually, the best thing to do is not to own it. And that way you can assure yourself that you're not in it when it does. If you're trying to time the market, it's possible that you do it right, but I think it's more likely that you do it wrong, and then you end up just as broke as everybody else who didn't see it coming. Anyway, I know we've got some people queuing up, so let me go to the phones. I'll take Steve calling out of New York.
Hi, Peter. Can you hear me?
I got you. You're live on the air.
Hi, Peter. Thanks for spreading the word about the real deal, what's happening out there. I've got a bunch of questions for you, but I'll just pick one. I'm totally on board with your thesis about that the dollar is going to lose substantial value against pretty much everything else, and I'm in the process right now of opening an account with Europac. Now, I haven't thought previously about investing in gold before very recently, so I might have a question for you that might seem a bit naive. Do you see any possibility of a future scenario where people won't look to gold as money, but rather will put their wealth in companies that own commodities that have real value to people, like energy, food?
Well, I mean, but that's not money. Those are investments. I mean, if you're talking about money, right, something that can be readily exchanged, for other goods and services, something that can function as a store of value unit of account, that's not going to be a share of stock. I mean, you're not going to be able to walk into a grocery store and negotiate, shares of a mining company in exchange for, a loaf of bread. But, so I think that when it comes to money, it's going to be gold. I mean, sure, gold, silver, something tangible. But certainly when people look to make investments, when they look to invest their money and own income-producing assets and brokerage accounts, and they want to own things that will pay dividends, yeah, I think those types of investments are going to do well, and I think people are going to gravitate to them over time.
Okay. And right now, what would you, based on the current market conditions of the foreign equities that are available and gold prices, what, for a conservative investor, conservative to, moderate risk tolerance, what kind of allocation towards